All right, so welcome to my class. The class is Financial Modeling with Excel, and I am your tutor, Mr. Famous, and this is me. Basically, I'm a software engineer with over 10 years of experience in tech, with an MSc in computer science, software, and security, and currently pursuing my PhD in artificial intelligence. I also held the MIS in Kogi State Polytechnic, Lokoja, and presently the CTO for BrainPass Innovations and Technology, Nigeria, where I serve as a senior tutor for BrainPass Code Academy in software engineering and data analytics, alongside other colleagues. I'm also a certified 3MTT trainer, that's the federal government digital innovation. And I've worked with a number of organizations, local and international, and I've trained a lot of persons in tech, most of whom now own their tech organization, married, and I'm the chief engineer for Heart Africa Intervention UK. So that's who I am, and that's who Famous is. So let's get to talk about BrainPass Innovation and Technology Limited. BrainPass Innovation and Technology Limited is basically an ed tech company dedicated to advancing technology through expert-led training and innovative solutions. So basically what we do, it's an ed tech. We do three major things. We train, that's the educated part of the program. One arm of BrainPass Innovations and Technologies. And then we have BrainPass Automation and Software, where we design software, custom software solutions for organizations, corporate ventures, and the likes. At the moment, we have quite a number of schools, tertiary and secondary schools that we manage. But I like teaching, so I enjoy training. And then we have BrainPass Networking and ICT Consultancy, where we handle tech infrastructure and services. Our mission basically is to deploy impactful technology, groom tech-ready professionals, and make Nigeria a net exporter of tech talent. And our vision is to be a leading provider of quality digital education that prepares individuals and organizations for success in the digital economy. We are not just interested in building, we are interested in training, we are seriously concerned with the goal for people to get to understand tech even more. All right. So that's the whole idea. We hope that through our trainings, through our teaching sections, people would be better intertwined with tech and be able to learn better. So that's just basically about BrainPass Code Academy. Our headquarters is in Kogi State, and we presently have about two campuses where we do training, and we also serve as consultant for so many organizations. Okay, so this course is financial modeling. Let me pass this notice. For you to take interest in financial modeling, you must have at least a good knowledge of Excel as a software. A good knowledge of Excel as a software. Um, One of the students called in. I guess they are trying to gain access. Okay, so that's basically you should have a good idea of how Excel works. So I want to believe that Miss Amaka has a good idea of how Excel works, right?
Yes, I do, sir.
Okay. So that's so many things because we are building on Excel is a monster, basically has lot and lot of features that are really wide, from just regular use of Excel to data analysis to inferential statistics to financial modeling. And of course, sometimes too, we train on valuation, which is a different course on its own also, and so many other things that comes along with it. So, Ife, are you sure you have a good understanding of Excel? Okay.
Yes, sir.
Okay. All right, fine. Okay, so let's get started. Um, so we're talking about financial modeling basically. One of the things we might want to look at is, remember this course is going to be a maximum of 10 contacts. We hope we'll be able to run it up before then. We'll be having it twice per week. We'll be having it on Wednesdays and on Fridays by 8 p.m. And it may not last beyond a section or two. Usually, once it's about 45 minutes, we'll time out of one section. And if there's a need to step into another section, I'll notify us. So content is going to be what is financial modeling, and we're going to be looking at what makes a good financial model, why should I learn financial modeling, and who should learn financial modeling. So let me ask a question. What do you think financial model is, or financial modeling? What do you think the idea is basically? I need feedback from my student. What do you think financial modeling is? Or you guys decided not to talk today? Okay. Um, Emma, thank you for joining. Miss Amaka, what is financial modeling?
Um, Financial modeling, I would say, is like a numerical representation of some aspect of the company's operation.
Okay, that's okay. That's great. Any other person? Okay, so what is financial modeling? Financial modeling is the process of creating a spreadsheet-based representation of a business financial performance. And basically, when you talk about a model, you are talking about a template, you are talking about a blueprint. And since we have said that financial modeling talks about creating a spreadsheet, a representation of a business financial performance, and then we also need to understand what a spreadsheet is. Every time spreadsheet comes to mind, we basically talk about rows and columns that form cells. So a spreadsheet is basically something we use for structured data. Basically, in terms of forms, there are two kinds of data. We have structured and unstructured data. Structured data are basically data that are in rows and columns. It could be CSV, it could be Excel, it could be SQL, it could be JSON file. They are usually in rows and columns. Why unstructured data do not really have a defined form. They could be in any form, and so they are referred to as unstructured data. Images, videos, they're all unstructured. They do not have a form. Okay. But in most cases, structured data are often related to text, and they have a form. So financial modeling is that we want to create a model that allows us to do a bit of calculation, a bit of evaluation, and perhaps a template that serves many other purposes. All right. So what exactly do we use financial modeling for? Four major things. We use it to make forecast. That's at the very large level. We use it to make budgeting, performance analysis, sales, and recording. One of the most popular use of financial model is for sales and recording. Sales and recording. And then you can, of course, draw out your performance analysis when you connect it with features like your pivot table and some other things, Power Pivot. And then you can also use it to make budgeting based on the results that you have from the model, and it could also be used to forecast. But the basic thing is that you are going to be taking in sales and recording, and then that sales and recording or transaction or whatever the case is, in terms of a model, can then be translated to other use for financial modeling. So a financial model basically has three parts. There is what we call the inputs, the calculations, and the outputs. Are we together now? We have what we call the inputs, the calculations, and the outputs. Um, Sometimes we refer to the input as assumptions. We call them assumptions. And then we have calculations and output. So I prefer you stick to input calculation output or assumption calculations output. So the assumptions are more like the item names, the price, the cost, the sales, the quantity. They are the column names, all right? Basically, the input, the things that you intend to give a value for. Okay, this is the cost. It is 2 naira, it is 3 naira. All of those things are basically referred to as um the assumptions, all right? I hope I'm recording this. I'm starting to think that might not be recording. Okay, fine. So that's basically what it is. And then when you talk about these assumptions, these inputs can then be formed into some sort of formulas or calculations. So the formulas are what we eventually do, put the assumptions to work. So if you say this input, I want to multiply it, I want to multiply my price with my quantity, I want to multiply my cost with my sales, I want to get some very tiny stuff like you want to be able to get. We understand at this level that okay, let me ask a question. What is the closest formula to getting the selling price of a commodity? What's the closest formula to getting it? Who's answering? What's the closest formula to getting the selling price of a commodity? I have three students. I don't believe we'll be quiet. You can unmute yourself and say something. What's the closest formula to getting the selling price? Or when we say selling price, what exactly is the selling price? What does it mean? Hello? Okay. Well, since we're not saying anything, maybe I should start calling him. Ife, what is the closest formula for selling price? And by the way, Amaka, what course did you study in school?
Banking and finance, sir.
Oh, okay. Beautiful. Beautiful. And I'm aware Ife did economics, right? So banking and finance, what's the closest formula to getting the selling price?
Um, Cost and profits. Your cost price and profits. Profit
Your cost
margin.
price and your profit. So it means that if I was not given the selling price, but I have a profit column and I have a cost price, I could do my cost price and my profit to get the selling price, right?
Yes, sir.
Basically. And what it also means is that if I have my selling price and I have my cost price, I could do my profit too by doing the selling
Yeah.
price minus the cost price to give you my profit.
Yes, sir.
Now, that profit may not be a profit by whole in terms of how much I am gaining. It might be what we call the very basic profit. You know, we have different dimensions of profit. We are not dealing with though, not too complex financial analysis. We have what we call the gross profit. We have your net profit and so many other kinds of profit. You know, sometimes in your profit, I have just bought something for 100 naira and I'm selling for 200 naira. Now, wow, that's my profit, 100 naira, right? But from that 100 naira that happens to be my profit, I have to take out my rent, assuming that's the only thing I'm selling. I have to take out the other costs that are there. I have to take out some other forms of labor and the likes. And eventually you find out that what we see as profit might not really be the profit in a lump sum. It might just be part of the profit eventually. Okay, so my point exactly in this case is that your input creates what you need to supply value for. Your formulas helps you to calculate on this input and the result you get becomes the output. So the core section of a financial model are input formulas results or input calculations outputs. Any of them is fine. Okay. Is that clear enough? Is that clear enough? Hello.
Yes, sir.
Okay, thank you. So, in clear terms, you enter assumptions and then Excel will do the calculation based on the formulas you had provided, and then you get an output. Simple. That's how simple a financial model works. What makes a good financial model now? For you to be able to say, yes, I've created a model, is working, is doing well, it must meet certain criteria, very fundamental criteria. So I took out my time to draft out about 7, 8 or so of these character of these features that make Excel I mean a financial model. First of all, there must be a clear guidelines in terms of the fact that it should be easy to read, uh well-labeled inputs, calculations, and outputs, of course. It should not be complex. Your structure should be very consistent. I usually recommend I use the left to right and top down flow. Well, we'll look at that basically in a short while, and then produce correct result based on reliable formula. What I mean, what we are talking about by reliable output is that at the end of the day, when you do when your model is put to a stress check, it should give the accurate result. It should not bend. It should give an accurate result, and you stick to what is obtainable in terms of referencing your cells. There are a bit more other things that makes out for in terms of when you talk about this, a bit more things like you have user-friendly layout, validation process, summary section, professional traits, and all of that. But these things are just some of the things that makes for a good financial model. The rule of thumb is that it should be reliable. That's the most fundamental thing for any financial model. Reliability means that is it can withstand lots of data input without break. Reliability also means that it is friendly and then it should validate it over time. Okay. Checks and flags when there are issues and put constraint where necessary. Now, having said all of this, it tells us that there are a lot of things we will need to go over again in Excel just so you will understand how to do your financial model. Okay. And who should learn financial model? Business owners should learn to plan and make forecast, and finance students, banking and finance, economics, in fact, human being generally should learn financial model because at one point you use it to do all the things about your business. Finance professionals, we just finished some trainings for ICANN within within the district. Tech founders, business owners, entrepreneurs, project managers, financial decision makers, bankers, what have you. Just think about it. They use financial model is important as it helps you to do a lot of budgeting and so many other things. So, um, in one sentence, anyone who wants to make smarter financial decisions, personally or professionally, should learn financial modeling. Okay. But then why should I learn financial modeling? Why on earth should I learn financial modeling? Okay, here are a few reasons why you should learn financial modeling. First, it helps you manage money better, especially if you're an entrepreneur or you're in the banking sector or just in business or a startup. It helps you to understand profit, cost, and cash flow, make forecast, make budgeting, present clear numbers to investors. Now, some of you will eventually need to pitch your ideas to investors, angel investors, equity financiers, and all of that. You will surely need a financial model to present to them. A financial model would basically contain a lot of things, including your financial projections for the incoming year and in terms of profit for the next business season. So it gives you good practical knowledge also on Excel and financial analysis. Here it is whether you are a student, an entrepreneur, professional, you need to learn financial models so that you can gain real world power to plan, predict, and grow. That's the idea of it. So this is basically the first part of our lesson. And just before I continue into, because it's going to be a lot of practicals, I like to take a question or two of something you are not clear with, and we deal with it and we proceed. I don't know if you have a question, please.
No, sir.
All clear.
I have a question,
Please go
and my
ahead.
question goes on. What's the difference between financial analysis and financial modeling? Thank you, sir.
Okay, that's a good one. Financial analysis and financial modeling. Okay, so anybody want to give it a try? Anybody want to give it a try? Amaka? Hello?
No, sir. No try, sir.
Ima? Is Ima even with us? Okay. So let's look at it from this perspective. When you talk about financial analysis, you are basically trying to evaluate, let me put it this way, you are trying to evaluate the performance of a business based on finance. Hello, you are trying to evaluate the finance of a business, or rather the health or the status of a business based on finance. That is in terms of um, how do we get this out of the business? What percentage should we give to this? What value should we do for this? Basically, the focus is to be able to evaluate historical data and then see how you can connect it with current financial data. Because you're talking about financial analysis, you are basically analyzing that finance. You are trying to see what have been spent. Now, financial analysis also is traceable to financial audits. Okay, you are trying to see what has happened over the past, how has money been spent, what was appropriated for this, what was appropriated for that. Are we going for an extra budget? Do we need a surplus budget? Do we have a surplus budget? Is our budget deficit and all of that? Okay. So in most cases, when you do financial analysis, you look at things like ratio analysis, you look at trend analysis, you look at financial statements. Okay. If you go to the bank and you get your 3 months financial statement, let's say you want to leave the country and they're asking for your financial statement. Now, when you bring your financial statement, look at what is coming in, what is going out, what is coming in, what did you spending on, how much came in for the whole year, is it up to something that will be called a proof of fund or it's not, and all of that. That's a financial analysis. We are subjecting your finance to scrutiny and then trying to get some of the information that we need. That is what we call financial modeling. Like I said, the end product of financial modeling financial analysis is such that you will get insights and then be able to take decision. So financial analysis also help to make investment. But when you talk about financial modeling, you are building a structure that helps you take record. I'm going to show you an example of a financial model that helps you take record. Okay. And then with that record, you can make some other projections. So I'm going to open up, I think I see it on my system. Let me do this. Can you see my screen? I'm not sure. Um,
No, sir.
oh, okay. Hold on. Now look at this. I have a financial stuff I should show you guys. Account, and I'm going to do account statement read. Okay, so let me open up this so that you see what the model looks like. Oh boy. Okay, beautiful. So this is a model, a sample of a model. And this model is quite large, so but it's divided into there are about 4 sections of this model. So I'm going to go to income. So here is income. So I have a model for the office that we use. Let's say this is 194 of entry, and I'm entering today's day 25th. This is a bit complex because it's connected to several things. And I'm going to say 6th, and I'm going to say 25. And I move down here, nothing is here. But of course, if I drag down this, I should see the month. The month is June. And let's say if Oluwa made a payment, if Oluwa Grace made a payment, what did she pay for? So I have a drop down that's giving me all of these. I can say, okay, she paid for K-Tech Polo, and now I'm here. Is it for registration fees or others? Others. Again, what course did she pick? Okay, I can say, okay, maybe she picked the Graus course, or I could also look for the Polo. Here, let's say I'm saying, okay, she did Excel Masterclass, and I'm here now. Right here, I'm imagining that the moment I picked Exam Masterclass, just in case you have not noticed it, um, if I had done, let me take it back so you understand better. If while I was here, I said this is a textbook, this is data, this is SAT, this is Polo, this is registration, close balance. Okay, so it's a Polo, it's under orders, Exam Masterclass, and I say okay. How much is this cost? Let's say exam masterclass is 70,000 naira, right? And then let me go so I'll be able to see the column name very well. This is the real amount. Okay. So what happens is that all of these items are aggregated. So if we are giving a 20%, right? Eventually, how much did she pay? Say 5,000 naira. Once that is done, if we apply the formula across board, we should see some other calculations that I'm going to show us. Okay. I don't just want to be too rigid with the calculation. Here you have outstanding. Here you have rec sum, payment, total balance, expected. Now notice that this thing, all of these things I'm doing here, translate into the account statement eventually. So if I go to annual balance sheet, all of these things are reading as formulas from the text itself. I think this one has been stripped, and here are the keys that are making it up. Let me show you the one that has a fuller formula. I'm going to go to full. Okay, can you see this now, guys? Can you see this? Hello, can you
Yes,
see this?
sir.
Okay, so look at this. This is very basic. If I do in April, um, let's say in terms of student tuition fees, we made, this is very basic. We're going to do something like this. We made 4 million naira. And in terms of corporate training, we made 40, let's say 2 million naira. And then for government, nothing. For consultation, nothing. Now, notice that there is a calculation that's coming out here that is saying total income, right? Let's say here we made a 4,000 naira. Here we did a 3,500 something, and here we're doing 4,500. You notice that for each of these, this thing is auto-calculated. And it's not just this, all of these are also calculated automatically. And then you see these values coming up on their own just before we are doing the calculation. So at the end of the day, we're able to see our financial cost by entering this value. This is a model in the sense that while we are entering our value, several calculations are going on the sheet. We do not need to go and start doing addition and subtraction again because there's already a formula down. That's what the model is. Okay. And it's complex because, like I said, this whole model translate into this financial statement. Oh, where is it? Translate into this financial statement. Yeah, it is. Translate into this. So there's an expense tracker that does all of that, depending on the kind of expense that you have. There is a key tracker, there is an income that does that, and there's also a budget that is translated. So from whatever income we enter and the expense we enter, it goes to reflect in the balance sheets for that particular month and then eventually for the year. So when you talk about the idea of analysis, you are looking at, you are subjecting what you already have, what you already have. So this that we already have, something like this, we can now analyze this to see if Brain Code Academy or this particular company can get a loan. We'll subject this to some sort of analysis to see if they can get a loan for investment purposes and all of that. But this setup itself is a financial model, and it can be very large actually, because from this setup I can create my pivot chart. I can create some awesome dashboards that can eventually be used to do some evaluation and all of that. So that's the whole idea. I know I've explained too much of it, but that's the whole idea of a financial model. I don't know if that's okay, if you understand that, or I should do a little bit more clarification on that.
It's clear, sir.
Oh, Emma, welcome. If Ed asks the question, is it clear?
Yes, sir, it is clear, sir. Thank you, sir.
Okay, and Amaka, is it clear?
Yes, sir.
Okay, so do we have any other question? Okay, fine. Any other question for me? Okay, so if there is no other question, we are going straight into the second section. But just before we go into the second section, let's look at some of the things we will need to learn in this course. Here I have a small curriculum that I often use. We're going to work on some of these things. For those of us who don't understand this, how does it work? We're going to see how it works and how you can use your VLOOKUP, efficient use of your if, cell referencing, both absolute and relative referencing and mixed. And then we're going to do some data validation and drop downs. We're going to also look at some keyboard shortcut for speed.